Hey, what's up, guys? Welcome to the session we have here planned for you today. We're going to be starting in like about 50 minutes or so. We got a little while to go. Right now, Chris Capre, the chief educator at the Benzinga Option School, is going to be with us today. We have a great session planned for you guys. You cannot miss this. There's a lot that we got to unpack, a lot of education. We're going to be focusing on pretty much education today for traders. And then from I want to make sure that you guys here. This is going to be amazing. So make sure you have everything ready. I just came in here to say hello and to let you know that we're here, but we haven't started 1 p.m. Eastern with Chris Capre, chief educator at the Benzinga Option School. You cannot miss this. Do not miss this, okay? Trust me on that. We're going to see you in a little bit. I just came here just to check up with you guys, see how you are. Feel free to put, we have Sunday here with Chris. So just make sure you're here by about 1 p.m. Eastern. That's when we're going to get everything started. So I'll see you guys in a bit. Hey, folks, we're going to be starting in about 30 minutes, okay? 30 minutes with Chief Educator at the Benzinga Option School, Chris Capre. A lot of you guys already know him. He's pretty well known out there, and 72% P&L on 2020. It's on the books, paper, and he's the Chief Educator of the Benzinga Option School. So I know it feels like there has been a correction out there. There probably is. There is. But it doesn't feel that way inside the option school. You can ask some of the members that are going to be here with us today. Chris has an amazing session planned for you guys. You do not want to miss this, okay? Trust me on this, folks. You do not want to miss what we're going to go through today. We're going to talk about current events, trade ideas, setups. At the end, we have some education planned for you guys, a great lesson. So you do not want to miss this. If you want to have a better understanding of the markets, trust me on this. Do not miss this, because Monday we're going hard in the school. So guys, be here, 28 minutes. I'll see you in a bit, and feel free to start going, off in the chat there. Ladies and gents, we're going to be starting here in 13 minutes with Chief Educator Chris Capre from the Benzinga Option School. He's going to be here with us today. We're going to go over a wide variety of topics. You do not want to miss it. And we're going to do a market overview as well. A couple of interesting things here with you guys. So just make sure you have everything ready. You're good to go. 13 minutes, special session here on Sunday, brought to you by Chris Capre here and the Benzinga team, of course. So don't miss this. Trust me, don't want to miss this. And any questions as well, post it in the chat. Some of you guys are emailing me about joining the school, you can use the link that's posted on the chat, and you can join us in school tomorrow morning when we chop down the markets and the lessons. So we'll see you guys here in a bit. Make sure you don't miss the sesh. 12 minutes. We'll begin. All right, folks, welcome everybody. Welcome, ladies and gentlemen, to the session that we have here for you today with Chief Benzinga Option School, Chris Capre. My name is Rodrigo. Very nice to meet you guys. We're going to be here today for quite some time with the madams, Chris, going over a couple interesting topics. Shout out here to Bill, Begze, what's up, man? Anthony Russo in the house, Amir, DG, Glenford, Jason, what's going on? JD's in the house, Marco. Shout out to all you guys being here on time. And in the chat, let me know when you guys are ready to start in the Zoom chat and also in the YouTube chat. Let me know when you guys are ready to start. We are going to be talking about some wide variety of topics. Chris has everything ready for you guys. I've been getting a lot of calls and emails, so I'm just going to get this out of the way. If you do want to join the option school, we're going to post a link in the chat and contact if you want to call and speak with me or someone here. We're going to help you out with that. So just so that we can get through the lesson here, guys, without further ado, let's go ahead and bring in the man himself, Chris Capre. How are we doing, sir?
Very good. And yourself?
Very good. And yourself?
I'm doing good, man. Doing good. How was your weekend?
It's a good weekend. Got to see the new Batman movie, which was awesome, and had a very strong week to end the trading week. So yeah, it's been a good weekend, and I'm looking forward to next week. There's going to be a lot of good trade opportunities.
Right. And I was telling everybody you have an amazing session planned for the folks here. So a shout out, Jeannie. Did I say that right, Jeannie? I know that. And all the folks here. I see we have a very nice group of folks here. Some familiar faces. A lot of members here of the school. So, Chris, I know you're ready and anxious to start. So let's go ahead. You want to share your screen here?
Yeah. Let me share my screen, and I will also do the webcam as well. Give me a second here. Let me get that going. All right, you should be able to see him pretty good now. Yep. Okay, sweet. All right, let's go ahead and roll here. So put a 5 in the chat for the Zoom members here and my members in YouTube as well watching live. So put a 5 in the chat if you can see my screen on how to trade options like pro. All right, Renew De Silva, DJ Batia, Daniel James, good to see you. All right, sweet. Awesome, appreciate it. And hey, Chris, it's Jeannie from the Benzinga Option School. Good to see you, Jeannie. Awesome. TK1, good to see you as well. Nice to see some of the members and also a lot of new people. It's it, good to see you. Good to see everybody. Ronald, Amir, Kenneth, Joe, everybody else from the Zoom. So we got Zoom, got it live in the YouTube as well. So we're doing both. Okay. So today's webinar is really, we're going to be talking about how to trade options like a pro. What are the skills that you need? And we're going to talk about a lot of examples of trades I'm in right now. Like I still have some partial positions running on AMD, MDB. Talk about trades we took last week, what I see going for the market going forward. But we're going to do all that in terms of the live trade ideas and things like that. We're going to do that at the end because I want to get through some material and pass on these skills to you so that this way you can find ways to make money trading options. So that's what we're going to be talking about. Some people have been saying, hey, it's a crazy market. You know, SPYs is down almost 12%. You know, a lot of people are kind of freaking out, worried and things like that. It's actually been very good for us in the Benzinga Option School. We've been making a lot of money and we can make money in both directions. And that's what we're going to teach you how to do today. So let's go ahead and jump into this now. And Danik, good to see you as well. Another member of the Benzinga Option School. So just for those of you that have never seen me before live, who here put a 10 in the chat if you have never seen me present before? This is your first time attending a webinar with me. So put a 10 in the chat. Mr. Joe Brown, Dark Horse, good to see you, Dark Horse Trading, another member of the school. Daniel says his first time. Ananth, Rocco, Anthony Russo, copy that. Okay, sweet. All right, so we got some new people here. Good. All right, so for those of you who don't know about me, it's your first time. Just going to do a brief. Obio says second time. Cool, welcome back. So I've been trading for over 2 decades professionally. That literally means that I've seen a crash or a bearish correction or a sellout, like major sell-offs, literally every 2 years. I actually started trading when the NASDAQ and the dot-com bubble was bursting. So I actually got to experience a bear market in my first year of trading. And that taught me a lot of ways on how you can make and lose money in silly ways. You can make money in silly ways and amazing ways in bear markets, and you can also lose money in silly ways. And I learned how to do both. And I learned how not to lose money and how to really make money, because these opportunities, these pullbacks present some of the best opportunities to make money. So I'm a former broker on Wall Street. I did work on Wall Street. I actually worked at FXCM as a broker on Wall Street. It was on Old Slip, which if you know Wall Street, it actually teased with Front Street and Wall Street. So I literally was like one block off of Wall Street and walked it to work every single day. So I'm a former broker on Wall Street. I have traded for a hedge fund, and I have been trading for over 21 years now. So I'm bringing a lot of experience to you here, and that's what I'm going to be sharing with you. This is the kind of experience that my Benzinga Option School members get to access every single day. How do we deal with markets like this? How do we trade this? How do we manage risk? How do we, build the right mindset? How do we find good trade opportunities in this? This is the experience that I bring every single day to the Benzinga Option School members. And you're getting a taste of this today for about an hour or two or something like that. I'm also a verified profitable trader. We've shared our results for 2020. We're like weeks away from posting 2021. Did about 72% return in 2020 with about 63% accuracy. Did about 25% in 2021 with about 58, 59% accuracy. In this year, we're already up close to about 10, 15%. And we're clocking in right around 60, 65% accuracy. So yeah, a verified profitable trader. I make money. And I just happen to teach a few hours a day and teach people how to make money as well every single day live. So that's my bio. Now, today we're going to be talking about how to trade options like a pro. There are 4 skills that you need to make money trading in any asset class, whether it's stocks, whether it's crypto, whether it's options, whether it's commodities. There are 4 skills you need to make money trading. And so these 4 skills, if you're going to trade just stocks, crypto, whatever it is, you need to have a buying and selling methodology. That's your strategy. You have to have a strategy that extracts alpha from the market, but that is not sufficient by itself. You can't just have a strategy and expect to pull money out of the markets day in, day out consistently. You still need these 3 other skills. You have to have proper risk management. If you don't have proper risk management, you will lose a lot on your losses and gain very little on your winners. You'll have one loss take out weeks or months worth of winners. You'll be losing improperly, and you won't be leveraging the math in your favor. So you have to have the second skill, which is risk management. You have to have the mindset skills to be able to manage your emotions, to be able to execute your trading plan, to not get sucked into FOMO or revenge trading or confirmation bias or holding on to losses for too long because you're afraid of taking a realized loss. I've had to deal with that with some students that, they kind of got suckered into certain trades that other people were promoting, and then the trade just kept going down, 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 and they just kept holding it. You have to have the mindset to be able to cut those things loose and move on. And there's a lot of mindset skills you need to make money trading. You also need analytical skills. So you need these 4 skills. You need these 4 skills to make money trading. You're missing any one of these, doesn't matter how good your strategy is, you won't make money trading. Guaranteed. Guaranteed. And I'm saying this not just from personal experience. I'm saying this from someone who's reviewed probably close to 500,000 accounts. I've looked at hundreds of thousands of accounts when I was a broker. I used to see how the best traders did and how the worst traders did. And I can tell you, if you're missing any one of the skills, you will not consistently pull money out of the markets year after year after year. These are the 4 skills you need to make money trading, but they are not, you also need specific skills to trade options, because options is its own animal. And so just like you may need certain skills to be a good athlete in one sport, you're going to need specific skills to learn another sport. I was a competitive skier for a long time. I've been skiing since I was like 3 years old. And when I switched to snowboarding, I thought it was going to be the easiest thing in the world because I was already a darn good skier. Wrong. Need a completely different set of skills to snowboard than you do skiing. Some of them are transferable, but some of them are not. The same goes with moving from stocks to options. You need specific set of skills. We are going to teach you what these skills are, and we're going to teach just a little bit of these skills and how you need to learn them. And we're going to talk about why you need to build these skills to make money trading options. It is also important that if you want to trade options like a pro, that everything is automatic. In the brain, we call this automaticity, meaning that your brain is wired. You've wired your brain in such a way, you've built the habits, you built the skills to where to execute these skills, you actually don't have to think that much to do it. You don't have to think that much to do it. Like you can see a chart and understand what's going on in the price action context in a matter of seconds. And if you need to execute your option trades, you can just look through the data and really quickly make decisions. That's automaticity. That means your brain doesn't have to use a whole lot of metabolic energy to actually execute your skills. If you are presented with a trade and you have to think, what's the risk on this? Okay, how do I manage this option here? What's the hedging impacts on this? Where's the risk on this one here? They're not automatic skills. You will need to make your skills automatic to actually consistently pull money out of the markets. Otherwise, your brain will be working overtime when the market is live. And that will make it hard for you to actually make good decisions because your brain's already using a lot of bandwidth, what we call working memory, to just figure out what's going on, let alone make money and make a decision. So super important. And then if you have these in place, if you have the 4 skills and you have the option skills we're going to teach, then you just need to apply that over time. And if you apply it over time, you will make money. Any one of you that has these 4 skills and has the option skills I'm going to teach today, you will make money. That's just a fact. You will pull money out of the markets. So let's go over these particular skills that you need to trade options, because I'm willing to bet most of you do not have all of them. And many of you probably don't even know what all these skills are. Okay, so you need 7 skills to make money trading. 7 particular option skills to make money trading. The first is the basic mechanics. How do options work? What is at the money, in the money, or out of money options? What is your strike? What is your expiration? How do calls and puts work? How can you be long calls? How can you be short calls? How can you be long puts? How can you be short puts? What are your risks to these? You need to know the mechanics of that. If you don't have that, that's your foundation. If you don't have that, then trying to learn the strategies and trying to make trades will be a losing process because you'll be making a lot of mistakes since you don't have a solid foundation. Nobody builds a house that they expect to live, to be around for a long time on a crappy foundation. The same goes for trading. If you don't have this down, you will be missing your foundation in trading. Let's assume you have that though. Let's assume you understand the basics and the mechanics of options and how they work. Well, then you're going to need this particular skill. You're going to need to understand how the Greeks work. And we're going to be talking about that today and how they work. And we'll even go through some examples as well so that you feel like you understand, because I've had many traders come to me and be like, hey, I have a call on this at the 110 strike, the market's at 120, and yet my option is still not making a whole lot of money. What's going on? Well, maybe you don't understand the Greeks. Maybe you don't understand the variables that actually affect the pricing of that. It's not just about getting direction. There are many ways you can make money, and there are many ways that you can lose money trading options. And you have to know the different variables that affect both. Otherwise, you may be making trades that you think are good, but actually aren't making a whole lot of money. It's very important to understand that. Volatility, very essential skill when trading options. You have to understand how volatility moves the markets and how it affects the price action, the order flow, and also the price of your options. It has a major impact. It's like one of the most important variables. Kind of like the different things you eat affect how you feel for the day, affect whether you have enough energy or not, affect whether your brain is strong or not. All these different things have an impact. These are all variables, and we'll talk about that. You also have strategies. This is where a lot of people spend a lot of their time focusing on, but the problem is that you cannot just have strategies alone to make money in the market. I have so many beginning traders that are just like, hey, all I need is a strategy to become profitable. And then I ask them, I say, do you have these other skills? They're like, no, but it doesn't matter. I have a strategy that makes money. Well, if you don't have the right strategy at the right time, because there's tons of option strategies out there and they're all available to be, everybody knows the different strategies. That's not the mystery in options. The mystery is how do you apply it? You have to know which option strategies are good for the right environments and which ones are not the best ones for that environment, because each one has different ways that they make money and lose money. And if you apply the wrong strategy at the wrong time, you will lose money or not make as much as you should. You also have to have this particular skill of price action. You have to be able to read the charts as an option trader. You have to be able to read the price action charts, particularly what's the order flow behind the price action that you see in the candles. You have to have that. If you don't, then again, you will be applying the wrong option strategy for the wrong environment. I can't tell you how many times I've tried to say, I'm bullish on the market. I'm long calls. And then I look at the price action and I'll be like, why long calls in this environment? Have you considered this strategy? Because you might not make that much money on the long calls, but you would make money in this based upon the price action. Just because you're bullish doesn't mean long calls is the right tool at the right time. So you have to be able to read the price action in the charts and then be able to match that with the option strategy. Super, super important. We'll be talking about two more things. We'll be talking about market gamma, what that means. And then we'll be talking about dealer hedging impacts, because dealer hedging impacts have a massive impact upon how the market moves on a day-to-day basis. So these are the 7 skills that you will need to make money trading options. Are there any questions on that from my YouTube or Zoom members here? So let's put a 10 in the chat if you have no questions on that, and put a 5 in the chat if you do have a question on that. And if you do, post your 5 and post the question to go with it. By the way, I see some people in Zoom also posting in the Q&A. For my Zoom attendees, if you can, post it all in the chat, because that means I just have one less box to look at. So if you're posting in the Q&A, post all your answers in the chat. In fact, for the rest of this webinar, post all your questions, your comments, everything in the chat box, not in the Q&A. So just have less boxes to look at. Daniel James says, can you please elaborate on volatility? Yes, we will. We'll actually have a time in the webinar that we will talk about this and how that affects the impacts of options. Renew saying 10, he understands that. Mark Thompson says 10. John M. Withiga says 5. Okay, N. Monroy says, what is delta? We're going to be getting into that. So you just stay tuned. We'll be getting into what is delta and how that works out. Elijah says, buy low, still high, sell high, only strategy that works if you're on the right side of the trade. I'm going to disagree with that, Elijah. You know, sometimes you can't always buy low. So what do you do if it's not low? Do you just wait and not make money? No. So it's not just buy low, sell high. Sometimes it's buy high, sell higher. Sometimes it's, you know, sell high and then buy lower. It's not the same strategy. There's gonna be a lot of times where the market isn't low. And so you can't just sit out during those periods and not make money. You have to be able to trade every environment, and the market's not always in a buy low, sell high mode. So sometimes it's very much buy high, sell higher. Round NG says chart patterns very difficult. Yeah. Cool. All right, cool. So let's go ahead and move on. Some good questions here. Cool. We'll be getting into all these topics here. Where do we even start? We'll be talking about that. We're going to be going through this here. I do want to point out, while we're going to go into some of these, we can't dive deep into all these. We just don't have the time. Each one of these subjects could be a several-hour class. So we're just going to give, brief introductions to these. And then when it's all said and done, then we're going to start applying these to live trades and trade ideas in real time at the end of the webinar. So make sure you stay to the end of the webinar so you can get some ideas about how we're going to be using these skills to trade the market going forward. Super, super important. Rodrigo, can you answer? We're getting some questions about the Benzinga option school. If you could handle that one in the Zoom, that'd be awesome. We will take a break in a few minutes just to talk about and answer some of these questions, but yes. Okay, so let's go ahead and talk about option Greeks. Super, super important. And I'm going to move this little thing over here because I will be doing some writing on the screen. So I apologize if this is interfering with that. So the way to think about Greeks is they are just individual variables. They are variables that affect the pricing of options. And there are many variables that affect pricing of options. A good example of this is, if you think about it, when you go outside to try and understand the weather and what clothes you're going to wear, you don't just look out your window and think that, oh, that's sufficient, because you can look out the window. Like right now, I'm looking out my window. It's sunny. It looks beautiful. It's actually cold. I live in the Lake Tahoe Mountains. It's like 40 degrees right now. So, and it's windy. So wind is a variable that affects the weather. Whether it's cloudy or sunny is a variable that affects the weather and how it feels outside. Humidity or lack thereof. These are all variables that affect the weather. And options have variables that affect the pricing of contracts, pricing of these options, on whether you make money or lose money. And that's the way you need to think about Greeks, is these are just variables that affect the pricing of options. Super important we understand that. Now, there are generally considered to be 3 core variables. We're going to talk about one briefly today. So we have delta, we have gamma, and we have theta. These are all core variables that affect the pricing of options. Some of these are primary variables, primary Greeks, meaning they affect the price of the option directly. And some of these are secondary, meaning that they actually affect the price of some of the primaries. So just like we have all these different variables that affect the weather, these are some of the variables that affect the pricing of options, meaning these are some of the things you have to understand if you want to know whether your option is a good trade or not. Super, super important. We're going to talk about ROC. ROC stands for rate of change. So what is the rate of change? How does the value of the option change based upon what? We'll be talking about that. There are other variables that actually affect the Greeks. So we talked about these Greeks like delta, gamma, and theta, and we'll be getting into delta today briefly. And there are things that actually affect the Greeks. So how does a Greek change the value of the option? Well, what affects the Greeks? Well, we're going to be talking about moneyness, time, and volatility. They all affect the options. They all affect the Greeks. So delta gets affected by moneyness and time and volatility. We don't have time to dive into all that. It's a long subject in and of itself, but we will be talking briefly about delta and how you can see how that has an impact upon your option price. So that's what we're going to be covering today. All right. So with that being said, let's go ahead and jump into delta. So this is the first Greek. This is generally the first Greek that you're going to learn. And it's very important that you get this down because it will tell you how fast your option will gain or lose value. Now, the most important definition here for delta is that delta equals the rate of change of an option value to the underlying. What's the underlying? The underlying is the option contract that you are trading, the instrument that you're trading on. So if you trade SPY options, SPYs is the underlying. If you're trading Tesla options, Tesla is the underlying. When you trade an option contract, you're not trading the shares directly, you're trading a contract that is based upon the shares, a contract about the shares. And so it's super important that you understand that we are not trading the underlying direct. We're not buying and selling the shares directly when we trade options. We're trading a contract on those shares. Super important. Now, delta is basically saying, hey, how much is my option going to be worth if the stock moves up or down $1? How much will my option be worth? How much does this option change in value? Deltas, which is the Greek symbol of this, is usually expressed as a percentage. So you often see it as like 0.25, 0.50, 0.75, 0.43. This is delta, and it's always between 0 and 1. It's always between these two values, just like percentages are between that. Same thing with deltas. We are going to do a simple calculation here. And I'm going to show you how we can do our first delta, how you, if you're new to this, can understand how delta works. So let's say you bought some Apple calls. Let's take AAPL calls, and we denote buying calls as a plus C. If it's a minus C, we're selling the calls. But if it's a plus C, we're buying the calls, okay? This is important because you need to understand how delta is going to affect the price of your contract. Let's say we buy let's say Apple is at 160 right now. So we buy the 160 calls, and it costs us $2 for this option, okay? If we have a delta of 50 on this, and Apple moves from 160 to 161, what's going to be the value of this option? Well, it's going to be the $2 plus the 50 deltas. So it's going to be worth $2.50. Now, there's actually more to this calculation. There's other variables that affect it. But if we just isolate delta here, then we know that this option will go, if it goes up $1, it'll be worth $2.50. So if you're wondering, hey, if Apple does go up $1 and my calls go up $1, how much is my option going to be worth? Now you can do this calculation ahead of time. Let's go ahead and let's go ahead and do one more example of this. So you all feel like you understand how this works. Let's say you bought some Apple calls for 375 at the 160 strike. And let's say the calls that you bought were a 60 delta. Okay, so that's the delta. Well, the formula is premium plus delta equals the new premium. So 375 plus 60 is what, 435? So if it goes up $1, it's going to be worth 435. So now we know. Now we know what this contract is going to be worth. Now, if you didn't know that, you might be seeing Apple move and you're just like, why isn't my option value going up more? Well, because you bought a 60 delta option. If you bought a 1 delta option, then when this moves up $1, this option will go up $1. So you can see how this is just one variable that affects the pricing of your options. And you can see how this is going to have an impact on whether this is a good trade or not, whether you are going to make the money that you think you are or not. If you don't know how to do these calculations, you might be really confused as to why your option is going up or down a particular value. Any questions on delta calculation and calls before we move forward? Let me see, we're just looking beta gang, yeah. Foreign lingo got me shaking my head, no cap. Elijah says, I'm a dip buyer, my strategy. That's good in certain markets. It's going to leave you without a strategy in other markets. And Rodrigo has some questions here. Rodrigo.
Hey, what's going on? Chris, well, I mean, I'm getting blown up here by emails and stuff. So I'm getting just a couple basic questions here about the school. So if you don't mind, I can just go over some of them really quick here before we do get on here with the session. Give me 1 second.
No problem. Let me get the syllabus out while I'm at it.
Okay. Oh, okay. I already pulled it out here.
You did?
Yes.
Good. Sweet. Okay. So looking at the syllabus here, if we go back to this slide here, which is how to make the 7 skills you need to make money trading options, this is actually exactly like this particular order. This is done in order because we did it as, hey, if you're going to learn options, you need to learn this skill first. Then after that, you need to learn this skill. Then after that, you need to learn this skill. And we did it in a particular order because that's the best way to learn options. We actually designed the entire Benzinga option school just like that. So for those of you wondering how the option school works, we actually designed it in such a way that each one of the lessons is done in order. So you build the skills from the bottom up. So we actually learn this particular thing about Delta and Greeks. We actually learn this in the second major lesson in the course. We do this because you have to understand how the Greeks are affecting your options. A lot of people learn the basics, then they learn about calls and puts, and then they start making trades, but then they don't understand why these trades aren't performing as well as they did. Maybe you need to learn other skills in order. So we actually built these skills in order to where the first lesson is the mechanics. So literally the first lesson is the mechanics. The second lesson is the Greeks. The third lesson covers everything about volatility. The fourth lesson covers the fourth lessons, which is actually several days worth of lessons, is just the strategies. One-legged, two-legged, three-legged, four-legged strategies. We teach you literally like 20 plus strategies, 20 plus option strategies to make money out of the markets. But that's not enough. You have to understand, as we talked about, the price action. So in the Benzinga option school, we teach you how to read the price action in the charts and then match it with the best option strategy. Because you may be really good at calls and puts, but if you're using that at a time where the price action is not supporting that, you're going to spend a lot of money on calls and puts, and they're not going to perform that well. So you have to understand the strategy, and then you have to match it with the price action. If you don't, then they're going to work against each other. Then on top of it, we also teach you about market gamma. So we teach you about how is the overall option positioning in the market affecting the flows. What is creating support and resistance? What is increasing or decreasing volatility? How can we trade with the market and not against it? And we ended off by talking about dealer hedging, option dealer hedging, how that impacts the movements on a day-to-day basis. If you don't understand how the dealers are hedged and what the overall market gamma is positioned, you could be trying to buy calls in an environment that's horrible to buy calls. You could be trying to sell, you could trying to be sell puts that is an absolute disaster because the environment suggests this would not the time to be using that. Imagine what it'd be like to know the overall positioning in the market, understand the dealer hedging impacts, and how that's going to create rallies or exacerbate the sell-offs. We'll teach you a little bit about this today, but we get into this, we go into every one of these things, each one of these things in the Benzinga Option School.
And this is the schedule, right? Just so we're clear. Monday, well, I mean, you meet Monday to Friday with the
Schedule's
students.
changing.
Schedule's
So we
changing.
just decided with the members, because we have a lot of day traders. I myself also like to day trade options.
Yeah.
And so we were originally having the lessons start about a half an hour before the market opens. But we decided as a school, also due to some scheduling conflicts, we actually have a new schedule coming up. And so that starts, I think it's either Monday or it starts the following week. But the first
Yeah, it's pretty
class,
flexible.
yeah, it's pretty flexible. So the first class is an hour and a half before the market opens. It's an hour long, and we're just covering trade ideas, live market analysis, student trade ideas. That's all the first hour is. Then we have a 2-hour break, and then that starts at 11 a.m. Eastern. That goes to 12 Eastern. And then at 2 o'clock Eastern, from 2 to 4, we have a 2-hour class. So by this time, the majority of moves are over for the day, and now we can just focus on the class time. So that's the new schedule going forward. So yeah, we just updated that recently. Yeah.
Yeah, and just so you guys know what you're looking at, this is the beauty of the platform. Give huge shout out to Neil, Tammy, Sandeep, a lot of people that are working big time on this platform, adding more stuff to it. You have all the recordings there. You have all the live classes if you want to go there. You have chat rooms where Chris Capre is posting pre-market updates and also, trade ideas and setups. The Peloton setup was a killer trade. And I know there was another one there as well. So you'll see all the chats here on the left side. The channels are loading. And yes, it does come with Benzinga Pro. I'm getting a lot of questions about that. If it comes with the Pro, yes, it does come included. But yeah, I think that kind of covers most of the stuff here that we had. There's a 7-day money back guarantee, guys. If you want to join, I'll post a link. And I think that covers most of the questions, Chris, unless you want to add anything else there that you think I'm missing.
Yeah, Ronald NG has a question. Can I
Yeah.
review the lesson later if the schedule does not fit? Yes, all lessons, all live sessions are recorded. We do all our lessons live. They're all recorded. If you miss it for whatever reason, work, whatever, it doesn't matter. You can always attend and watch that recording later. Yes. And I will actually go over in about 30 minutes from now. I will go over some of here's how the chat works. Here's where students post their trade ideas. Here's where I post my market analysis and commentary, give you information about the option flows and dealer hedging impacts. What are the key levels for the day? So yeah, we'll talk about that in 30 minutes. Yeah. So thanks for sharing that, Rodrigo. I appreciate it. There's a lot of questions on it right now.
Yeah, I know.
Okay.
I just want to get them out of the way. It's always like a dilemma because I don't want to get in the way of the lesson, but then I don't want to ignore the questions as well. So I hope you guys understand. But yeah, let's go ahead. Let's rock it, Chris.
How is the Thursday's rapid fire related to this class? Actually, Lisa, we'll talk about that because we gave a couple trade ideas on Thursday and they all pretty much played out as expected. So yeah, we'll talk about that in a little bit. All right, so I'm going to share the screen again. And so we went over delta calculations. Now let's real briefly talk about how calls make and lose money. So besides my Benzinga option students, because it's kind of cheating, how does a call, which we write as a plus C, how do long calls make money? So we'll call these incomes. What are the different ways a call can make money? And what are the ways that can lose money? Let's talk about that. So who knows the answer to this? Non-Benzinga Option School members, because you'd be cheating. I know you guys know this, but I want to know for the people who are watching in YouTube and for the people who are watching in Zoom and haven't attended my Benzinga or not members of my Benzinga Option School. Yeah. Based on stock price. Okay, that's part of it. Yes. So let's get that here. So we'll call that stock price direction. So we'll call this direction, which is actually delta, because the deltas are actually going to determine whether that option makes money or not. So direction, in other words, the stock or the options going in your favor, that will influence the deltas. And that is one way you can make income. Okay, so there's one way. What's another way? What's another way I can make money? Mark Thompson says implied volatility. Very good. Implied volatility doing what, Mr. Mark Thompson? If we are long calls, how can implied volatility help us make money? Kenneth Roof says, a newbie looking to learn it all. Welcome aboard. Good to have you here. So Paul Shea, contract price term. Yeah, it's going to do that via direction. So the delta is increasing. It's going to do that via IV. So anybody who says stock goes up in value, yes, IV. IV can inflate or it can reduce prices. IV has to go up from the time we bought these long calls to actually create an income on this. There's a third way as well. Volume. No, volume by itself is not going to increase the value. 0 days to expiration, 50% out of the money. That by itself is not necessarily going to determine. That's not an income on a long call. There are three variables that are going to make income on a long call. The strike price would be directly related to direction and deltas. So the third is gamma. The three ways you can make money on a long call is delta, IV, and gamma. Those are the three ways. You can get direction right, but if implied volatility goes down, then the value of your contract goes down. So this would actually cause your call to lose money in value. Gamma, if you get the delta, if the stock goes in your favor, then the gamma is going to add to the deltas. But the gamma could be small or big. So you could get direction right, which will help you to get gamma gains as well. But your calls may collapse in implied volatility. If you bought options right before earnings, held it through earnings, and then watched the implied volatility collapse, you might have actually made money on the direction, but lost a ton of money on the implied volatility, because implied volatility is one of the variables that affects the price of the option. So you can make money on these three ways. There is 4 ways to lose money. That's also the delta. That's also the gamma. That's also the implied volatility and theta. So you can lose money 4 ways on calls, and you can make money 3 ways. How much you make on those calls will depend on whether do you have all 3 of these aligned, or maybe are you missing one of them that's actually causing losses. Kind of like you have 3 business products, but only 2 of them are making money, and one of them is taking on heavy losses. It's offsetting the gains they're making in the other products. This can happen with long calls. You can also lose a lot of money on calls if you don't have the deltas and therefore the gammas, if implied volatility goes against you and you experience theta or time decay. So these are how calls make and lose money. If you don't understand that, then you are going to make a lot of trades that won't make as much money as you think, or they'll lose a lot more than you think because you didn't understand all the different variables. Super, super important.
Yeah, that happened to me when I was just starting trading options. I just, stepped into it, the whole craze, everybody stepping into the market, trying to figure out. And that's really when I wish I had the education, whenever everybody was profiting and making money because they already knew how to use options. And I was just trying to wing it, but that doesn't work, right? In this market, right? It
doesn't work in this market, and it doesn't work in a lot of markets. Yeah. You got to understand that if we look at the S&P 500 on the weekly chart, for those of you that joined trading shortly after COVID, if you joined trading shortly after COVID, this is easy mode. This is easy mode to make money. This is not that difficult to make money. There's a saying in the markets that we have on Wall Street: don't confuse a bull market for brains. You could have a rip-roaring bull market, and we've had many of those. We've had dozens of those over the last 100 years where a lot of people thought they were geniuses. And then we start getting just a little bit of a correction. And I mean a little bit of a correction. This is like nothing compared to the corrections that I've seen. I've seen much worse corrections than this over 21 years. This is just a little correction of 12, 13%. And people are losing hand over fist. And it's important to understand that you were in easy mode. You're no longer in easy mode. And you can't just YOLO calls and puts and think that that's going to work all the time.
It's so easy to say buy and hold when the market's going up, right? But when the markets are not going up, and that's the thing with options, that you do know how to use them. So the market could be going up, going down, staying flat. There's buying hold right now is not working for this market, but you know, and a lot of
No,
these
you're getting
funds,
crushed. Everybody who had a buy and hold portfolio right now maybe has 2 out of every or 3 out of every 30 tickers they have making money. That's it. The majority of people, their buy and hold tickers are not making money in this market. They aren't. And to be
Right.
honest, I don't care whether we're in easy mode or not. I can make money in this. I'm making a lot of money right now. Some of my Benzinga option students are making a lot of money right now in this bear market because they're not trying to YOLO calls and puts.
Yeah, and I do want to point out that, like, I mean, most funds out there, like, you know, like, oh, this fund, you know, amazing, you know, 30% on the year. Like Chris Capre, 72%. 70. So it's like, you know, and I understand, you know, like you're very humble and everything, but like, you know, performance is what matters in this game. And you always hear that, like, you know, these great funds, legendary funds doing 30% on the year, but like, you know, with your trading with options doing 72% on 2020, literally the worst damn year ever we've had. That just, you know, it speaks volumes. And especially when people are, you know, if I don't know what's going to happen in the markets, you know, that's up for discussion. I know that you're going to do a review of the market at the end, which I'm looking forward to. But like, no matter what happens, you have to be prepared and you have to know how to take advantage of the volatility. And I'm sure that's why everybody's here, because they really want to make sure that whenever the next dip or rip happens, that you are prepared with the knowledge, because that's what, you know, helps you make the trades, and also the community aspect, all that stuff with the school, right?
Huge, you know. So, you know, for example, we actually took an ARC trade. We shared this trade with our members here. And so this was, let's see here, where was the ARC one? Let me roll the ARC one. There we go. No. Hold
By
on
the
a
way,
second.
quick shout out here for Jay for just joining here, the Benzinga Option School.
Welcome aboard. Welcome aboard here. Let's see here. Where did I post that? I'll have to look it up. I had it here just a second ago. So, but we posted an ARC trade. Let's see here.
It's the one at the bottom on Friday.
Is it?
Friday, 2:18 p.m. BOS members.
There it is. Yeah.
Yeah.
So we did we shared this trade with our members here. ARC trade, broken wing butterfly to the put side. So we've been bearish on ARC for quite a while. We bought it for roughly $2.10 and closed it out for $5.35. You know, this is a trade that we all did together, broken wing butterfly here. I've had a couple trades right now that I'm still actually in right now. For example, the MongoDB, I'm still in that one. And AMD, I still have one portion of the leg. I'm still short AMD from 116. This is the actual trade. I'm still up the remaining portion. I still got about $1,200 in profit on this one. But yeah, we're short at 116. And here it is, like literally $13 lower. We are also still holding our MDB short at 329. MDB is at 317. How did we make these trades? Via options. These were all via options. It was all options that gave us these trade ideas. These are the kind of trades you could be making if you were learning these skills, the things that we teach in the Benzinga Option School, if you were getting access to that. So
super important. Are my numbers right? But like, is that ARC K trade that's over 100% on that trade? Is that right? You buy it for like $2?
Yeah, it's about 150%. I got to be honest. When I talk about trades, I don't talk about like, and this is an important lesson we had for the members here, is that it is more of a marketing tool to say like, oh, I made 100%, 200%. But the thing about it is that it's not an accurate measurement of your job as a trader to manage risk. You could have 10 trades in a row where you make 100%, but you only made like $50 on those. And then you can have one trade where you lost 100% and you lost $500 or $1,000. And you're actually now in the negative because of that one trade. And so while it's good for an individual trade, it doesn't represent how good a trader you are. And that's why you see on Twitter all these people saying like, oh, another 100% trade. Oh, another 100% trade. Well, if you win 10 100% trades in a row for $50, but then you lose one trade for 100%, on Twitter, that person's going to look like a god, but they're actually a bad trader. And you wouldn't put your money with them because they don't know how to control risk. So
well, without
that was
education,
a great trade. That was a great trade for sure. But it's super important to understand that people on Twitter tend to use these marketing tactics to make them look good when in actuality, they're a bad trader. And you have to understand, you have to know the difference. Most people don't understand that.
Well, this is coming from education, and that's really how I like the approach, because through the education, through the lessons, that's how you're able to know what you're doing. Because I've spoken to a lot of people that do trades, and they don't even know like what their risk is on those type of trades, like selling calls and things like that. So Allah has a good question. How big should our comp be to start trading while doing the class? I know people that have joined just to learn. I know people that have joined for the setups. I know people that have joined to just to peek in on 4 lessons, and I know people as well that literally just come for the classes and don't even trade, because now the brokerages are getting trickier. Now they're making you take pop quizzes and things like that when you want to trade options. So you actually, and they're going to get, tougher and tougher on that stuff. So you really do want to know what you're doing before you get banned from options on failing a test on a brokerage. So that's why we do have people here just for learning, or for the trades, or for the lessons, or the ongoing mentorship with Chris.
Yeah, it's a great question. In terms of how much, I would have to agree with you, Rodrigo, in the sense that I do not recommend trading with money until you actually understand what you're doing. In the beginning, I recommend demo trading just so you get the experience down, so you get the concepts down, so you get the knowledge down. Once those things are automatic and in place, and you've shown that you can handle those proficiently, then you should be trying with live money. Just like if you're a beginning golfer, you don't want to walk on the golf course and go up against 3 pros and bet a round of 18, bet like money on who's going to win the next round of 18 holes. You don't have that experience to be putting live money out and betting on yourself as a golfer. The same goes for trading. So in terms of how big should you be doing it to take the course, that really actually doesn't matter. You should actually get the skills down. Once we get your skills down and that you're actually solid in them, then we can talk about how big an account you need to be making money trading. How can you turn your $1,000 account into a $5,000 or $10,000 account? Then we can be talking about that. But first things first, you have to get the skills down. If you don't have that, it doesn't matter when you make these trades. You will be in situations that you won't understand. You'll make mistakes. And that's a horrible thing to do with your own money. Like the last thing you want to do is make a bunch of mistakes because you didn't know what you were doing and have that happen with your live money. It's the worst feeling in the world.
And
so yeah, great question there.
Speaking to that, Chris, so I don't know if I don't know if I mentioned this to you, because I know we talk about trades and things like that, but like, when I first started trading options, I'm honest about it for one reason, so that people don't really jump in like that, because I blew up my account twice when I was starting trading, and that's really a horrible feeling. There was no option school, nothing like that. So it was a lot tougher. I'd say a lot tougher back in 3 years ago. But if I would change one thing, I would say is that I would not do it alone. I would not start to do it alone. I would have some sort of community, some sort of person that like actually knows how to do this, because that's not how you want to start. You don't want to learn by blowing up your account and losing thousands of dollars. That's the wrong way to learn. You don't even learn that way because you don't know what you don't know. So you don't even know why you lost money. So the goal of this is really to help you guys, not just, help yourselves with the trading side, but learning how to go through the motions. Because if you're new, you're going to end up learning by taking losses, and that's really not how learning should be. That's not a good learning experience, I would say. So right.
I'm glad you mentioned that, because when I started, you got to remember, I started 21 years ago. There was nothing like this. In fact, that was one of the major reasons why I wanted to get a job as a brokerage, because you got to remember the internet was still young then. There was like only a handful of websites on options and stocks and FX, and that's it. There were no live classes like this. You had to go to like a workshop live and travel to do that. And so, to have situations where you are losing $25,000 and $50,000 because you don't know, and you don't have any community or mentor to work with. If I had had this Benzinga option school, if this was available 21 years ago, I'd be a centimillionaire today. Instead, I just have to settle with being like, a millionaire. So it's like, okay, I would rather be a centimillionaire and not have gone through the painful experiences that I did back then. So, I couldn't imagine what it'd be like to be like, hey, Chris, or hey, Rodrigo, I'm about to make this option trade. What do you think about this? What do you think about, is this a good trade? Do you like the expiry? Do you like the strikes? Is this the right environment? What do I have to worry about with volatility? Is this the right price action? Like, that's the kind of feedback my students get from me on every single trade they make. They make a trade, they post it, I analyze it. I'm like, yay or nay, and then this is what I would adjust on it. Here's a good trade, adjust your strikes like this, switch the expiry like this, maybe switch to this strategy because of this, watch out for this on the theta decay, like all these things. That feedback, 21 years ago would have saved me millions, like millions.
Well,
And
keep keep in mind,
Just think about it be like to make less bad trades and make a lot better like winning trades.
Something that I do now that I've been a little bit more like familiar with the industry, something that I do keep in mind now though is that for the brokerages, this is just a business model. You know, a bunch of new accounts, you know, a lot of these traders buying calls out of the money, market makers taking all that cash, and then, you know, we can't help you, but you can give your money to our investment advisor. He's going to charge you 8% a year, and, you know, give him all your money, you know, and that's about it, right? So that is a business model, right? And some people don't know that. Some people don't understand the industry that well. That's why I think that the focus that we have here is the education to show them how to do it, and give them the actual tools and skill sets that people need so they can do it themselves, which is new, I feel.
Yeah,
in
and
a sense.
we've talked about the many different ways that traders can make money. We teach people how to day trade. We teach people how to swing trade. Maybe you're a buy and hold trader. Okay, well, we can teach you how to actually add alpha onto your account just by doing the buying and hold and adding options into it. So there's a lot of different ways how to hedge when the market's pulling off, you know, the way it has been. Like we're doing great. We had a great last week. It was fantastic last week, and the market has been selling off. So, you know, we can teach you how to make money in bull and bear markets. We can teach you how to hedge your losing position so you lose less. We can actually teach you how to hedge to where you actually make money if the stocks pull back. So these are the kind of things we can teach. I would have paid a lot of money to have this back then, a lot more than most people are paying for this. And so it's super important that people understand the value of the education that they're getting.
Well, look at it this way, Chris. Like, you know, you could go month after month after month after month losing money, not knowing what you're doing, right? And that's that. I talk to thousands of traders a day. I don't want to go over like the amounts of money, but you know, if you don't know what you're doing with options, that's real, and recognizing that, right? So that's why we have to be honest, guys. Like, there's a lot of misinformation out there. There's a lot of TikTok kids out there, a lot of social media, and it's easy to just, I guess, fall for that stuff, right, Chris? So the way I look at it, man, it's like, you know, when you're talking about money, man, like you better trust somebody who's been there and done that, not some guy just because he's got followers, you know?
Yeah, that was the best thing that I saw recently was there was somebody took the course of the most popular TikTok day trader out there. And he's talking about how he's making millions and living in Beverly Hills. And he has like all these different cars and he's taking a private helicopter to work. And then when you actually take his course, he's like, oh, I trade with a $50,000 account. And I'm like, yeah, you aren't paying for that lifestyle with a $50,000 account. I guarantee that you're not taking your 50, like you couldn't even afford the property taxes on your supposed Beverly Hills home with a $50,000 account. This is, you know, the thing that people don't understand. It's very easy to fall for the glitz and things like that. You have to understand the differences. And so, you know, I can't even imagine what kind of bad things and losing money techniques that person is teaching, because that's just that is ripe throughout the markets today. And, you know, very few people today that are teaching have institutional experience, have 2 decades of experience in the market, have traded for a hedge fund, have traded for a brokerage, you know, so that, you know, weigh that experience as you will. But I think it's an obvious answer as to who you'd want to be learning from in that case.
Yeah, the way I look at it is that, like, if I would have taken the course, obviously, you know, I paid for the course and I would have saved myself a lot of losses and also a lot of gains. So it's not just about making the money, but it's also about not losing the money. And of course, I can't forget to give a shout out to our newest family member, Hassan. Shout out.
Welcome aboard, Hassan. Good to have you here. Looking forward to working with you. Okay. Well, with that being said, the remaining questions, welcome aboard, Hassan. It's excited to have you aboard. You're going to love it. You're coming in an exciting time. It's just super important. So let's go ahead and get into a few of the other things. So we talked about how calls, let's kind of step back and let's talk about how calls, we talked about how calls make and lose money. So you got an idea of how the Greeks actually affect options, but there's another variable that affects options, and that's volatility. So volatility affects pricing in a big way. How volatile, if you think about it like this, you got to think of volatility, the scientific term that you often run into for saying light or sound is amplitude or intensity. And volatility is one of those things that actually affects the pricing of options. So let's think about it like this. If you have a stock that is at $100 and at the end of the day, it only has a capacity to move up $3 to like 103 or down $3 to 97, well, then this is the range of volatility that can express itself. That means that it has the capacity to, on most days, stay within the 103 to 97. That's like what, 7 strikes up and down. That is going to have a different pricing of its option in terms of the premium than a stock that can move up to, say, 110 or down to 90. This has a different expression of volatility or amplitude or intensity than it can move up or down. The stocks that have more volatility, their options tend to be more expensive because the person who's selling those contracts, they have to worry about a lot more strikes and possibilities that it can manifest in any given day. So to offset the risk of that, we have to increase the value of the options. That's very important. If you don't understand that, then you're missing one of the most important mechanics of how options are priced. Volatility is one of the most important mechanics. It's also a way that you can make money. You can be wrong on direction, but you can be right on volatility and make money. We talked about how also on long calls, you can be right on the deltas and you can be right on the gammas, but you can be wrong on IV and you not only lose money on just the IV, but your overall call is actually worth less. So you have to understand how volatility affects pricing. The two terms that we generally talk about in volatility are implied volatility and historical volatility. Historical volatility is how volatile was the stock over time? How did it actually manifest? Did it actually stay within that 103 to 97 range, or was it less? Did it go to like 101 and 99 on any given day? So how did the actual volatility express itself and realize? So super important that we understand that. Implied volatility is actually just saying it's an estimate, it's a forecast. This is what we estimate the volatility of the contracts going forward. This is what we estimate going forward. How it actually manifests, this is implied. Like implied will often be like this, but the historical will often be less. This creates trading opportunities. But you have to understand that that's not a one-way street. Historical and applied do have this relationship, but a lot of people will take that and be like, oh, well, because implied is always greater than historical, I only want to sell options. I can tell you professional option traders are not just selling options. They are buying options as well. You have to know the difference. You have to understand volatility to know the difference on when you want to be buying or selling. Case in point, if this is a volatility spectrum, and this is low vol, this is medium vol, and this is high vol, if you are buying calls, you do not want to be buying calls at the higher end of the volatility spectrum. Because again, one of your incomes is IV. And so if it has very little room to run to the upside, but has a lot of room to go to the downside, you could be long calls and be right on direction. The stock could go up in your favor, but the implied volatility comes down massively. So you do not want to be buying at this higher end of the spectrum. You have to be buying either in the lower end or the middle end to where there's capacity or potential for IV to increase. Otherwise, you're taking away an income on your long calls. So it's super important you understand that. We also have to understand how volatility affects price action and order flow, because it does have a major impact upon that. We will touch upon that when we talk about market gamma and dealer hedging, because volatility will have a massive impact upon volatility and hedging. Any questions before we move on? Yeah, exactly. Okay. Any questions? Put a 10 in the chat if there's no questions. Put a 5 in the chat if there is. And if there is, post your question. Just putting a note to my friend there. Sweet. All right, great. Okay. Let's talk about one example of volatility. So many of you probably in September of 2021 were probably trading a stock called OPAD. OPAD had this situation where volume and implied volatility shot through the roof, like an absolutely enormous day. So this was like normal volume levels. And then in one day, the volume just explodes through the roof. Could have been a Wall Street Bets thing, could have been a short squeeze, whatever it was. And if you were just trading the stock, you could have made or lost a lot of money. But if you were trading the options and you understood volatility, you would have definitely made a lot of money. So I tweeted about this ahead of time. What did I say? So this is the day that the volume's exploding, like hundreds of millions of shares on the day, hundreds of millions of shares on the day. And I'm watching this and I'm watching how implied volatility is exploding. So what did I write? OPAD prior to today had 35,000 options in the entire universe. That's all strikes, all expiries, only 35,000 total. In one day, the options volume explodes to 250,000 options. That's an 800% increase in one day. That's enormous. That almost never happens where you see an 800% increase in the flows in one day. That happened. Today alone did 214,000 options. So after the end of the day, it had 250,000 options. And in one day, 214,000 options. It's huge. It's absolutely huge. What did I notice? Most of these options were short dated, expiring tomorrow. This was Thursday. They were expiring this Friday. Of the 214,000 options that were traded on that day, half of them were expiring this day. And 96,000 of these 214,000, almost half, 45% of them were long calls. That means that traders are buying calls in droves. Literally 1 out of every 2 options was traders buying long calls. Okay. And they're all expiring on Friday. As an options trader, I realized there's an opportunity there. I also realized there was another opportunity. Implied volatility closed at 651%. That is astronomical. That almost like never happens. Like almost never happens. I was watching it 200, 300, 400, 500%. And I'm like, as an options trader, I know this is not sustainable. This is going to come down. That's going to create a volatility trade for me. What did I say? On Friday or Monday, this will lead to a massive reversal. I wrote this right here at this little candle right here. What happens shortly after the market? 5 minutes later, an hour later, pops up, sells off by the open, sells off. Almost all of the gains unwound in one day, exactly as we called it. We traded this. How did I find this trade opportunity? Because of options. If you were watching the price section alone, you could have been long, short with all this volatility. Everything in the options was like, hey, stay bullish on the day and then look to short at the end of the market here before the market closes, because this is going to lead to a massive reversal. And what did it do? It closed around $20. The next day it closed around $14 in one day. It's a $6 drop in one day. How did I find that trade opportunity? Through options. These are the kind of trades you could find and take advantage of and not get sucked into buying more calls or buying the stock thinking that it's going to go to 50 or 100. Because if you learn how to read options, you can tell when a reversal is more likely going to happen or not. Super important you understand that. Am I trading through Thinkorswim or on a different platform? Thinkorswim. That's my main platform. Good question. Okay. So this is one way to create. And I posted this ahead of time. This was September 16th. This is the 17th. This is the kind of trade ideas that my members get access to every single day. Like if I find trades like this, I'm pointing this out every single day. And they're also sharing their trade ideas, which I'm analyzing every single day. Like imagine what it'd be like to get access to that kind of opportunity on a regular basis. How much would that do for your account? How many more wins would that add? How many less bad trades would you make? No brainer.
You also have like a news. Well, I mean, we will touch on that later, but I know you just came up with something new, like so super recent for the option school members. So
yes. So we just actually started a weekly newsletter. I was already doing pre-market commentary every single Monday through Thursday. So in my Chris's trade ideas, I'm giving pre-market commentary. I give the levels, I give the flows, I tell them what's going on, what am I watching for? And these have been like bulletproof. Like we've been nailing it day after day after day, like literally 4 out of every 5 days. Like I have students that message me and are like, dude, I just read your pre-market commentary and I just day trade based on that. And they're making money every single day on that. So But with that being said, we decided to, so this is Monday through Thursday, we decided to create a newsletter completely free for Benzinga Option School members. And it's about, 6-7 page report. And I talk about, hey, what's going on in the week? Like this is one we did a few weeks ago. What's our focus? What are we watching? We go over analysis. We explain, why the market did what it did. We talk about trading plan, trade ideas, all these things. We talk about potential trades that we like. We had talked about Etsy that's likely going to reverse as it gets in the support zone. What did Etsy do? It went into the resistance zone, then sold off. As we said, it would sell off. Like last week, we talked about before the week started, this comes every Sunday in their email inbox. We talked about how commodities are going to pull back this week. They're overextended. What did most of the commodity plays do? Like BTU, like VALE, like DBC, they all pull back. Why do we get these trades right? Because we understand options and order flows. And so this comes out every single week, free for members. It's a paid, I think, $14.95 a month, but it's free for members. So every single Sunday they get this in their email box. They have their game plan for the week. And then Monday through Thursday, I'm also giving them daily market commentary and game plans for the week. So super, super important. Let's see here. Wayne Person says, did you look back to also determine the downturn based on the past chart? I think you're talking about my OPAD. No, I just looked at the option flows on that day. Everything about option flows, open interest positioning is what gave me the trade idea. I didn't need to look past on the chart. I knew that this was going to reverse. I've seen this too many times as a professional option trader.
And I'm just going to add, I know that you put a trade idea there with Peloton, and I've been trading options for quite some time now. I shared my experience when I started, and I've been learning a lot with the option school as well. All the things and classes and things that you put out there. And when you were talking about Peloton and you were talking about the 40 being that resistance level. So at that point, me trading options and understanding the risk of each contract, the strike price expiration and all that, to me, I was, okay, this is going to be a quick trade for me. So I'm going to buy some short dated weekly puts, and I'm going to buy them when they get close to that area that Chris told me, that $40 mark. Literally, the stock had like a 12-cent jump above $40. And then from there, it just went all the way down to like the low 30s. So, I mean, that was a triple digit gain. But at the same time, I'm thinking that, some traders need levels. Other people need, everybody needs different things. But ultimately, once you in the option school, you start getting more familiar with the terms and the structure of the pricing of contracts, you will be able to make trades and determine what kind of risk you're trying to take. In this case, it was a short-term trade. So I went with the short dated puts weekly, and I traded just from the levels that I got from Chris. So
yeah, we literally top ticked it on the day. So here was our live analysis on this. So this is 9:21 a.m. Pacific, I think. And so it's like noon Eastern here. So this is right around, it's right around here. It was this candle that I'm writing it. This 9 o'clock candle when Peloton was ripping that day. It had missed on earnings, and then everybody was talking about potential buyout. And so I literally, in fact, let me box this and show you on the 5-minute chart. I'm going to box this, and then let's go to the 5, and then we'll take a look at that directly. There we go. So this day. So this is the live analysis. And again, it was options that allowed me to do it. This is the live analysis. Like literally, I'm writing this at 9:21 a.m., which is like right here, this candle. Okay. So this was the live analysis. No, Peloton has exploded in share size today, over 150 million. Implied volatility has spiked over 250%. I don't think this is sustainable, especially since there are lots of short dated options. Over 200 of the 720,000 options are short dated. That means they're going to come on the board and then they're going to come off the board really fast. This means theta will start kicking in heavily on Wednesday, Thursday, Friday. This was a Tuesday. And then I said, I suspect unless they find a buyer this week, the stock will pull back due to massive time and IV decay. There are lots of short dated calls at the 40 strike, but very little beyond that. This means Peloton might struggle to get beyond $40 today. And if nobody buys calls further higher than this, then we have our short-term resistance for the week. So looking to short here soon, once there's enough weakness, we'll do so with fixed risk options. As there's a chance it explodes higher, that's why you control the risk. But it is unlikely we get another day like this with 150 share volume on the day. One last thing, the 1 minute chart shows a volume spike on the move into the highs at 39.16. The last push up shows a weaker volume spike, suggesting the upward movement is weakening. Look for transitions and structural breaks for exhaustion of the day. That's at 9:21 Pacific. That's this candle right here. It's between this and this one. 15 minutes later, what does it do? It spends less than 1 minute up at 40 and then sells off the rest of the day. We literally top ticked it within 20 minutes.
The funny thing is that
the rest of the day, and then the next day, you see the next few days, it rolls over lower. Boom, look at that. So we literally called it within minutes of the highs of the day. How did we find that trade? Option flows analysis, implied volatility analysis, open interest analysis, understanding dealer hedging impacts, all that stuff in real time. So
You know
a
why
lot of people were still buying and loading up on shares. I was telling them, bad idea, you want to short this. And if you did, you would have made money.
the thing, Chris, is that I was actually already, so I was in Peloton. I had bought shares like early in the morning, right? So I was not aware that you were checking out Peloton or anything like that. I just saw that you talked about it there. So I was like, okay, then I guess I kind of have already a selling point and I have another trade on the downside as well. So that just happened to be a coincidence where I sold my shares and bought puts afterwards because you brought up, but if I would have not seen that, then it would have cost me money, of course. And that's really where we go back to, right? It's not just about making money, it's about keeping that money there, right?
Yes, it's about understanding when is the trade likely going to reverse, when is it going to likely continue, and you can do that through flows. There was a good question on this. Divija Batia says, hey, is option flow the equivalent of the L2 for stocks? No. And here's why. Option flows are different. L2, so when you look at L2 on your broker platform, level 1 quotes is time and sales. So price, spread, and time and sales is level 1. Level 2 is looking at the dome and the ladder. Think about it is though, a lot of those numbers that you see on the dome and the ladder are not actualized order flow. They're just potential liquidity or potential resting orders. They don't have to get actualized. Like HFTs can come in there and spoof things all the time. They do it all the time. Option flows are different. Option flows are not only actualized, but they also explain the hedging impacts. They give you insights into the hedging impacts that actually will result from that. If we have enough time today, we'll get into that. So yeah. Are you looking at intraday timeframes only for options, or do you zoom out? I look at all timeframes. I day trade, I swing trade, I long-term trade options, I do it all. In this case, would your puts lose value to IV? We didn't just buy puts. We did a broken wing butterfly to the downside. Yeah, that neutralized the IV coming down. We thought and we knew, or we felt very strongly that IV would not be sustainable in the days ahead. And so how do you neutralize that? You do it through offsetting. Yeah. Yeah. Super important you understand that. So if you hold, you lose due to time decay. How do you make money in the multi-day holds? I just explained that, Paul. So you can neutralize it. You can do it through bear put spreads. You can do it through broken wing butterflies. That will neutralize the IV decay on that. Then it becomes a much more directional play. Yeah. Yeah. So, okay, sweet. All right, let's get back into a few more things because some of those hedging impacts, I want to get to that. I do want to get to that. Okay. So we talked about option strategies. I just briefly want to mention that. Option strategies, you need to think about them: long calls, long puts, short calls, short puts, spreads, calendars, all these different things. These are just tools to extract money out of the market. You cannot use these tools all the time. Just like if you're a carpenter, you're not always using a hammer and nail. You have many different tools as a carpenter. I have a friend who's a carpenter. He has all these sophisticated tools to like build and craft, do his craftsmanship and all this stuff. You never use all the tools at the same time. You have to know when to use the right tool, when is the best time to use it, and when is the best time to use another tool. Each strategy is a tool. If you don't know how to use that tool at the right place and the right time, you will either make less than you should, or you'll lose more than you should. That's really the only outcome out of it. If you make money using the wrong tool at that time, you're not going to make as much money as you should. If you use it at a time that is, you're going to lose money, you'll end up losing more than you should. So each strategy has its own environment, its own application, its own, usage. You have to understand that each tool can extract alpha, but not every tool will in that environment. How do you know when to extract the right tools at the right time? So let's go back to our long call scenario. So if you think about a long call, what's your outlook on a long call? You should be strongly bullish. This is what we cover in the Benzinga option school. You should be strongly bullish, not mildly bullish, not, we're kind of bullish. No, you should be strongly bullish if you want to do long calls. If you're not strongly bullish, you should not be using long calls. Your max loss is the premium. You have to understand that. If you don't understand that, you don't understand how calls work. Now, technically, your profit potential on long calls is technically unlimited, infinite, because a stock technically can go to infinity. I've never seen it happen. I've never seen a stock actually go to infinity. If you've seen a stock, please send me the ticker. I'd love to take a look at it. But you can make a lot of money on calls. The profit potential is massive. Your break even on calls will always be strike plus premium. So this is a strategy you need to understand. If you don't understand this and this and this and this, you don't understand calls. You do not understand long calls. You should not be using them. So what's your break even on? Strike plus premium. So if I buy a call at the 40 strike for $2 in premium, my break even is going to be 42. If it's $3, it'll be 43. You have to know what is your break even at expiry. Volatility. How does an increase in volatility help my long calls? It's a benefit. We want that. This will make me more money if the IV goes up. If IV goes down, I will lose money. Again, you have to understand this about long calls. You can't just get direction right. On the other side of this coin, how does time decay affect your long calls? That's a negative. Every single day that you're holding this long call, that option is losing money. You could be getting the direction right. The stock could be going in your favor, but you're going to lose money on this day and on this day and on this day, and on this day and this day. And you have to understand how is that going to affect the price of your option. So you have to understand what are the ways that calls can make money and lose money, which was that prior graph we showed you. If you don't understand that, then you shouldn't be trading long calls. If you don't understand all of this, you shouldn't be trading long calls because you will make mistakes and you will make less when you win and you will lose more when you lose. Super important. What's the break-even equation on that? It's strike plus premium. Yeah, super important. So this is the P&L diagram on long calls. I'm kind of breezing through this because I want to get to the market maker and hedging activity stuff. And where, we don't have as much time to go over that and live trades and things like that. But this is a long call P&L diagram at expiry. So if I bought this long call at 40 for $2 in premium, one contract, $2 in premium, my break even will be 42. Anything beyond 42, and this thing makes money at expiry. Now you have to understand, how does IV, if you don't hold it to expiry, how's IV going to affect it? How's theta going to affect it? How's delta going to affect it? You have to understand how all these work. Now, if we just isolate one variable, we know that long calls make money if it goes in our direction and if it does it really fast. So we take the least amount of theta decay and yet implied volatility goes up. Well, then what's a good environment to trade long calls? Corrective structures. When you have an impulsive, corrective, impulsive structure, and then you get elongated corrective structure, during this environment, IV is going down and down and down and down and down. So in terms of that volatility spectrum, this IV is just coming down. And so when the breakout does actually happen, that's a really good time to get long calls because IV is going to be in low. You're going to get the direction really fast. So you make money on deltas, you make money on an increase in IV, and you also get your gamma. So you make money on all three ways. Now imagine what it'd be like to have a playbook for every option strategy you trade. Long call, short calls, long put, short puts, bull put spreads, bear put spreads, bull call spreads, bear call spreads, brokering butterflies, ratio spreads, calendars. Imagine knowing the playbook. Oh, this is this price action. This is this environment. I want to do long calls. Oh, it's this one. I should be doing brokering butterflies. Oh, it's this one. I should do call spreads. Oh, it's this one. I should do butterflies. Like imagine what it'd be like to have that playbook. That's what we teach you in the Benzinga option school. What should the charts look like in each environment? Looking at some questions here. As far as a strategy, is it better to start with large cap stocks? Is it better to start with large cap stocks to get a better understanding of these 7 parts? No, you don't have to start with large caps to do that. There are plenty of mid and small caps you can start to do with this. Yeah, you don't have to stick to that. Stocks can't go to fame because money supply on the planet is finite. That's technically true, but it's not just based upon money supply. Stocks price are not just based upon money supply. They're also based upon options as well, which actually doesn't have anything to do with money supply. You can trade a lot of contracts without there being money supply. So yeah. Yeah. Okay. Any other questions on this? No. Okay. All right. Paul Shea says you explained this incredibly well. I'm glad to hear that. Thank you. Imagine this is the abbreviated version. Imagine getting the detailed version as a member. So, all right. So the last portion of the lesson I want to talk about today, market gamma and dealer hedging. I'm going to briefly explain this so that you understand how this affects price. Because if you don't understand this, you won't understand why GME did what it did. Why did GameStop rip the way it did? Why did CAR rip 300% in one day the way it did? Why did, AMC rip the way it did? And will they do it again? If you don't understand options, then you won't understand whether they will or whether they won't. So the bottom line is this, is that option dealers hedge. And I will give you a very brief understanding of that in the next slide. But option dealers hedge. The dealers that are filling the other side of transactions, they hedge these transactions. And this hedging is reflexive, meaning that it's like automatic. It's algorithmically driven. So if I do a certain thing and they are on the other side of the transaction, they have an automatic hedge for that. It's like done algorithmically, super fast. There's no thinking. It's not some dude going, how should I hedge that? No, it's like instantly done. Their hedging activities drives price way more than you think it does. Like if you think price is just share volume on the day, you do not understand options. And since option flows are way higher than share volume across a lot of tickers right now, that actually means that option flows and consequently option dealer and market making hedging flows is having a bigger impact on price every single day than the share price itself, or than share volume itself. And if you don't understand that, then the stock's moving, you don't understand why. We teach you that why. We teach you that in the Benzinga option school. I'll give you a brief insight to that. But hedging affects flows and price. If there was no options market, GME would not have squeezed the way it did. Yes, it was partially a short squeeze, but if you actually look at the flows, most of the funds were actually out by the time the biggest portion of the squeeze actually happened. Melvin Capital was a little slow to the party, and so they decided to stubbornly stay into it. But it wasn't Melvin Capital alone and the short squeeze that allowed it to rip the way it did. It was actually option flows. That was one of the biggest contributors of that. Gamma squeezes don't happen without options, and gamma squeezes don't happen without dealer hedging flows. Super important you understand that. We can also have positive and negative gamma environments. So for example, if you are long a bull call spread, that means you're long a call, let's just say 50 delta, and you're short a call higher up, let's say it's 25 delta, even though you technically have one long call and one short call, you're actually still net long options. You're net long 25 deltas. You are net long options. If we reverse this to a bear call spread, then you would actually be net short options. The market, if you step back for a perspective, if you were to own all the options on the planet, let's say you own all the options in SPYs, you would know whether you are net long or net short options. You would also know whether the notional gamma is positive or negative. That has an impact upon price. So I've shown this time and time again. It's important that you get this, but let's go over a dealer hedging example, just so you get an understanding of how dealer hedging works just on one scale. There's like 5 different scales that dealer hedging activity takes place. And just on one example, let's show you how dealer hedging works. So let's say you, the trader here, and this is the dealer, and then we'll go there delta hedging. Let's say you decide to buy 100 SPY calls. Plus C, right? Let's say it at 50 delta. The dealer who takes the other side of that transaction is short 100 SPY calls. So they're short 100 C at a 50 delta. Okay. So they're short 50 deltas. How are they going to hedge that? If they're short calls, let's delete this here so it's a little clearer. If they're short calls, well, then the risk to them is the upside. Because when you're short calls, if the market goes up, those short calls lose money. So how does the dealer hedge that? They buy shares. How many shares? Well, at 50 deltas, if there's one contract for every, if there's 100 shares for every one contract, 1,000 shares for every 10 contracts, 10,000 shares for every 100 contracts, at 50 deltas, that would be 5,000 shares. So this is the initial delta hedging that they do. This actually, their hedging activity helps move the markets higher. It's one of the, it's going to be a major reason why the market moves higher because of this hedging activity. In today's market, which we covered in our Benzinga options newsletter, so if you were a member, you get access to that. The market right now is short share, or short is long puts. So traders are long puts. Dealers are short puts. If they're short puts, where's the risk? The market going up or down? Down. The market goes down, those short puts lose money. How do they hedge that? Short shares. So they actually, as the market's going off and traders are buying puts, dealers' hedging activity exacerbates the downside. This hedging activity is happening all day, every day, millions of times a day for millions and millions and millions of shares. Notional in the billions, maybe even trillions. If you don't understand this and you don't understand how the flows are positioned, you're just a kite in the wind because this is all going around moving the market up and down and you don't know why. You have no idea why. Why did the market sell off the way it did? I don't know. It just did. Why did the market, you know, as I mentioned in my Twitter account, the first day that the market had that major rip in SPYs, what was it? Let's see. So a few weeks ago, we did have a little bit of a rip in SPYs. So it was, this day. So we had 2 days of rips and SPYs. I tweeted about this after the first day. I tweeted about this the second day. I said, do not expect the market. This day, the market went up 4%. What did I say the next day? Before the market even opened, I said, do not expect the market to rip another 4% today. Most of what was happening today was adjustment in dealer hedging activity. And so what happened the next day, instead of ripping 4%, it only ripped 2%. And it wasn't share volume. Share volume was only down 20%. That can explain why there was only a 50% gain from the day before. If share volume's down 20%, shouldn't price also be down only 20%? No, because option flows and dealer hedging impacts affect price. And if you don't understand that, you're going to be thinking, hey, I'm going to get another 4% today. Market only goes up 2%. Why did I not make as much money? What happened? I bought these deep out of the money calls, expecting this to rise 4%, only went up 2%. I made less money today because you didn't understand options. That's why. Dealer hedging impacts affect options. This is a chart, a mathematical chart, beautiful chart done by Option Metrics. What they did is they calculated the notional gamma for the S&P 500. That's the institutional ETF or the institutional index. SPY is the retail ETF. And on the right side, this is positive gamma. This is positive gamma. On the left side, this is negative gamma. Each dot is a representation of how many percentage points it went up or down on any given day. And you can see we're in positive gamma, this contracts. When we're in negative gamma, volatility expands massively. So if you're wondering, gosh, why is the market so volatile today? Maybe you need to understand market gamma. And if you don't, You might be thinking, oh, the market's going to only move up a few percentage points. No, market gamma will tell you, no, it's going to be a highly volatile day. And if you know that volatility is going to be strong, maybe you should be trading volatility, not mean reversion. Mean reversion is great on positive gamma. It's awful on negative gamma. You need to understand these things. Otherwise, you will not know what's happening on a day-to-day basis. Members of our Benzinga Option School, I give this information every single day, Monday through Thursday. I let them know what's the market gamma we're in, what's the positioning, what they should expect in terms of volatility. Super, super important. Here's some great examples of what markets look like in positive gamma. Here's positive gamma. Here's negative gamma. Here's positive gamma. Look what happens on positive gamma days. I bought calls. I was expecting this to rip. Didn't happen. I shorted volatility in negative gamma. Bad idea. Negative gamma, you can see the volatility is much more expressive. Get back into positive gamma, slims down. If you do not know this, you'll be trading the wrong strategy in the wrong environment. Questions, Lisa, again, UVXY related to gamma? No, that's just the short, that's the ultra short-term VIX. Yeah, that's just the ultra short-term. I think that's the Pro Shares ETF for the short-term on VIX. That's not, that doesn't directly give you information on gamma, market gamma. Duke Togo says dealers don't pay fees, they get paid to provide liquidity, but they're not just providing liquidity, they also take liquidity, Duke. They also take liquidity out of the market. We gave that example. If you are long puts, dealers are short puts, they're going to short shares. That's not providing liquidity, that's taking away liquidity. Dealers aren't, their sole job isn't just to provide liquidity, it's to provide a market, and that can be taking or making liquidity. That can either be providing liquidity or taking liquidity away. Their initial commitment is to provide a market and then hedge that. And they hedge it through multiple mechanisms, not just delta hedging. Super important you understand that. If you don't understand that, then you don't understand how that works and how that affects the price. Andre Brown says, I was a little late to the party. Sorry to hear that, Andre. You missed a really good class. Sam, you got to post your questions in the chat, not in the Q&A, because I'm not looking at the Q&A if you can. DVH Batia says, if you want to trade stocks, would you look at option flow versus a stock screener? Yes, I do both though. I have a Benzinga Option Pro screeners watch list that I share that with the Benzinga Option School members. But I also, I'm looking at, it's not just like, hey, here's the top stocks moving on the day. I want to know what the options are looking like on each individual stock, because that will give me trade ideas. Yeah. Sounds like flow is more real time than a screener. Flow is more real time, but it also gives you, it basically gives you the market gamma, gives you the weather ahead of time. So we cover this. Let me close this out. We cover this every single Monday through Thursday. So literally like, look at this one here. So March 9th, okay? This is March 9th. Let's note this date here, okay? This is about 15 minutes before the market opens. I'm on Pacific time, so market opens at 6:30. EU and UK markets are quite green to start the US session, but we feel the markets are still poised for weakness and resistance to hold. Markets remain in negative gamma. I'm giving them the information about the market gamma. Almost the same as yesterday, which suggests while there was some positive gamma being built, overall, we think this current rally is VIX getting a bit rich and VIX coming down. VIX comes down, IV drops from that. So VIX was already down 3 points from that. Most of the option positioning is between these three levels, 430, 410, and 400. I am of the view, based on option flows, that we will have a hard time closing above 432 today. Note, this is March 9th. And that rallies can be opportunities to sell. Again, before you went into the trading session on March 9th, rallies into 432 are opportunities to sell. The only thing that could propel SPYs past this level is an exogenous catalyst, a catalyst outside, the markets right now, Russia, Ukraine, something else going on, or VIX gets sold off below 27. It's important to note Vanna rallies, in other words, from VIX coming down, have short-lived consequences, as we've seen 3 times this year. Hence, we like selling rallies and trading short-term impulsive moves while keeping downside protection through the 16th. That's the FOMC. Here's our key levels. But what was the main point in SPYs? Any rallies into 430, 432 should be sold. Now, this is March 9th. So here's March 9th, right? Is the market's barely about to open at 424. What does the market do? Goes right up to 429, 430, goes into our resistance zone, and then sells off the next day. What does it do the day after that? On the 10th, tries to get into in the pre-market and already is selling off. We can't get past this level. Why? Market gamma, option flows, open interest. If you don't understand that, then you're missing these levels ahead of time. Imagine what it would have been like to have faded this, on this day. It opens up the next day, you make profit on that. And then you see overnight it's spiking in here and you're not thinking buy on the breakout. You're thinking, I'm going to fade this because he gave me the order flow in the market gamma and how I should trade this. And what happened? Boom, sold off. This is not hindsight. Again, this is the 9th. This is the live session. Blue is aftermarket and pre-market. White is the live session. I gave these levels ahead of time. We even said this again on the 10th. As suspected, share volume down yesterday, no real heavy positive delta trades holding. Yesterday's rally was more VIX coming down than actual real money interest. As also stated, the 430 level would hold as resistance, and today's drift lower continues to highlight the importance of our level and positioning. So I'd like you to just think about what it would be like to have a playbook like that every single day, to get a playbook for the week on Sunday, to get a playbook for the week that day. How many less bad trades would you make and how much money would that save you? And then how many good trades would you make by having these levels ahead of time, having these areas ahead of time, having these information about the flows ahead of time? That's a no-brainer. That's a no-brainer.
And that's especially in these markets, right? Because the markets, you could say they were pretty volatile when COVID hit, but there was only pretty much like one theme, right? QE through the roof. Everybody knew that, stocks were going to end up going up, but now we're dealing with the aftermath. We don't know where the stock market's going to be in 6 months from now or a year from now, with everything that's happening. So this is, look, maybe you winged it in 2020. I was one of them, but this is not a time to wing it. Trust me, it's not the time to wing it.
No, and just to and I'm glad you mentioned this, and just to highlight the importance of option flows, I'd like you to look at the dates that the COVID sell-off started and when did it end. This is not a coincidence. This is not a coincidence. So this is the week where the COVID thing started off. What was this? February OPEX. What is OPEX? Option expiry. That's the monthly option expiry. That tends to be where the largest concentration of options are. Traders had a lot of long calls going into this. And when that happened, they dumped them. And then on top of it, they also got long puts. So the dealer started selling shares. Boom, market sells off. When does the market start to rally? This is the end of the March OPEX. This is the March OPEX on the 16th. The next week, the market rallies. That's not a coincidence. Why? Traders had a lot of long puts going into this. Long P plus P. BlackRock had like a multi-billion-dollar position. They unwound it on that. This created a rally. This is not a coincidence. So you're wondering why one of the first global pandemic in 100 years, why did the sell-off only last 6 weeks? Well, if you understood options, you would know that. If you didn't understand options, you would just think it was something in the market and everybody got tired of selling and everything was cheap and it was time to start buying. Wrong.
That's the thing. That's the thing. Some people think, when I remember, like before, even when I started, it was like, do I need to know about options? I don't need to know about options if I'm not trading options. And then I started figuring out that all this information that you're delivering, it totally matters and impacts price action, levels. So all that stuff that you're learning, if you have that, this is just a huge help to kind of give you that extra confidence and really find to read beyond the tape. These are just things that most people think, hey, I won't need this. I don't trade options, but it'll make you a better trader. It doesn't matter if you're buying just stocks.
It'll make you a better trader. It'll tell you what kind of trades you should be taking for that day, what kind of trades you shouldn't be taking for that day. You know, is it time to buy the dip? Is it not time to buy the dip? Is it time to sell? Is it not time to sell? The whole buy low, sell high strategy that somebody was talking about earlier. Well, if you don't know this, you won't know when. You're just going to be a kite in the wind who's just going to be throwing random darts on the chart. Yeah, you may have some technical methods and some fundamental methods, but if the flows aren't there, those methods don't matter. If the flows aren't there, those methods don't matter. Order flow is the most proximate driver of price action, whether it's technical flows, fundamental flows, sentiment, or option flow hedging based. The bottom line is all actualized order flow is the most proximate driver of price action. If you don't understand how flows are affecting that, you'll have no idea when things are going to reverse or not. And so, you know, this kind of information, imagine getting access to that every single day. A couple questions here. DJ Batia says, Gamma could help alert to a big move. Yes. Possibly faster than a screener. Absolutely. A lot of those alerts I'm giving before the market even opens. So super important. When I try taking a stock trade, I miss the intraday move and catch it at the tail end. So profits are minimal. And I've gotten caught many times when price drops. Yeah. Imagine having this information ahead of time. Allah Hassan is saying, I think for me is trying to pick up on the lingo and understand what everything means. I know I'll have a steep learning curve to overcome, but what do you recommend for that? You're in the school. You'll have plenty of time to do that. When I see you in the school on the live class on Monday, I actually organize the class in ways that actually help your brain optimize learning. So my study at the university was neuroscience, particularly human learning and memory. I'm going for my PhD in neurobiology. Like, I do understand how the brain works. And so I actually teach the classes and organize the classes in a way that helps you optimize how the brain works. So we'll give you the process in the course, Al-Hassan. Yeah. So when I see you on Monday, make sure you hit me up and we'll give you the best path and process going forward. Yes, there is some lingo to overcome. It is a learning curve, but just like in neurobiology, like I'm having to learn like cellular and molecular biology. I didn't spend time studying that, a whole lot in college. It's just a lot of language that you have to learn. But once you get it, it allows you to look deeper and deeper and deeper into that. So that will come in time for sure. Andre Brown says, I remember the school as well. I just got into the two-legged option section. Do you go into depth on this subject in the classes as well? Yes. It's great stuff. I can't wait to get through all the sections. Yes. We go over all this stuff. Yeah. If you've only gotten to two-leggeds, you got a lot more to go. There's the other half of it. Yeah. So yes, we go into this. And make sure you ping me up so I know who you are in the school, because everybody sometimes has different names. It's kind of cool. Sam says, what you're saying is, even if I trade only stocks, I need to understand options to get the order flow right. Yes. Yes. Because option flows, and including dealer hedging flows and market gamma, impact how the stock moves. So even if you don't want to trade options, you still need to understand them, because they are one of those 800-pound gorillas in the room. They are moving the market around. And if you don't understand that, you're missing that. Yes. We offer mentorship. Yes, Paul, we have mentorship through the Benzinga Option School. It's not individual one-on-one, because we have hundreds, if not thousands of students. No, it's live membership. We offer live classes, instruction, 3 hours a day, Monday through Thursday. And then you get about an hour on Friday. Sometimes I go long. A lot of times I go over. But yeah, live instruction every single day. Yes, that's the mentorship you get. You can ask me your questions. Hey, Chris, I'm looking to trade this strike, this expiry. What do you see in the flows? What's going on? What about this? That's the kind of mentorship you get. Everybody shares their trade ideas. I just heard a noise. Was that you?
Yeah, that's our producer, DJ
here. Okay. So we're pretty much over time right now. Like we're definitely long on the webinar right now. So this is kind of bonus territory in terms of the session. So we're just kind of going a little extra to help you all out here and things like that. Rodrigo, I'm going to hand it over to Rodrigo in a few minutes, and he's going to share more about how the inside of the school works and everything like that. But yeah, let me answer a few more questions here. are classes recorded for the members who have full-time jobs and cannot log in during the open market times? Yes, Jason. All classes are recorded and made available for members to watch later. Yes. It's not lifetime access. It's a once a year. It's a yearly subscription. Yes. But you get access. We did the math. The cost of the school, which also includes Benzinga Pro, we did the math. You get, it works out like this. 50 weeks a year, you get 2 hours of classes that are 3 hours of classes. That's 150 hours, right? So 50 weeks a year, you get 3 hours of classes times 4 days a week. Okay. So it's actually, you get with 369, 12 hours, Monday through Thursday times 50 weeks a year. That's 600 hours. Then you also get 1 hour lessons on Fridays. So that's another 50 hours. So for 650 hours of live instruction, this does not include the pre-market commentary. Again, you get the pre-market commentary Monday through Thursday, and you get the newsletter, which I think is $14.95 a month. You get that free
And Benzinga
every
Pro.
Sunday delivered to your email inbox. You get all this. This comes out to $2 an hour. The cost is like whatever, $12.97. That comes out to $2 an hour for live instruction. So less than a cup of coffee for every hour of live instruction. That's a no-brainer. I would have paid way more than that when I first started trading, way more than that. So yeah, hopefully I answer your question. What time is the live session tomorrow? We haven't determined whether we've gone to the new schedule tomorrow, but right now, the current schedule is 7 a.m. Pacific, 10 a.m. Eastern for the first 2 hour class. Starting next week, though, for sure, the following, not this week coming up, but the following week for sure, the new schedule will be an hour and a half before the market or after the market opens. So that is 11 Eastern. So 11 Eastern is the first class. That's market analysis, trade ideas, student trade ideas, Q&A kind of stuff. Then 2 to 4 Eastern, the last 2 hours of the US session, is the second class. And so that's the 2 hour class where we go over the lesson of the day. So yes, all those skills we talked about, they're all those 7 skills we talked about, every one of them is a lesson. Yes. Great question. Are you guys linked to? No. 4D Drover says, thanks, this was awesome. Back to the gamma. How can you tell if the market is positive or negative gamma? So once you think about it like this, Drover, think about it like this. So let's start small and then work our way up. If you have a trade that is net long, let's say you got a call, let's say you're long a bear call spread. Let's say this is 25 delta and this is 50 delta. You're long these, you're short these, right? What's your net position? Your net position is long 25 deltas, right? So you are technically, even though you have one call and one short, you are technically net long options, right? Okay. That also means that you also have a notional gamma tied to these options. There's a gamma to this option. There's a gamma to this option. Now, if you were to take a step back and you were to collate and summate, say, all of the SPY options, all of them, for all strikes and all expiries, you would know whether you are in a net long options or a net short options environment, right? It would just be the same thing, just a bigger perspective. You would also know that if you could collate and summate the notional gamma for all your positions, you would know if the market is in negative or positive gamma. I have a proprietary app that does that, and I'd share the data with my members. If you want to build your own proprietary app that does that, you're welcome to do so. We just had somebody post some spam in there, so we can get rid of that. That'd be awesome. Pablo Luga says, what happens with students that only speak Spanish? Hola, Pablo, ¿cómo te va? Sí, yo hablo español, entonces sí. Pero no, ahora no tenemos clases en español. En el futuro sí, eventualmente, pero ahora no tenemos clases en español. Entonces, en el futuro sí, pero ahora no sé. Entonces sí, necesitas traducir desde inglés hasta español. So yeah, but Rodrigo has some information about that as well. Yeah. Can you have a French accent when speaking Spanish? It's Castellano. Yeah, I learned in Argentina, and in Argentina, particularly in Buenos Aires, they speak castellano. Entonces, castellano es un poco diferente. No es playa, es playa. No es cebolla, es cebolla. Entonces, sí. Yeah. Castellano, it's very different. But I can speak Spanish, Castellano, Valenciana. I can speak it all. A bit of a mind bender. Yeah, it is. Yeah, that's why, most people can't do that on their own, Drover. That's why, you work with people who can get you that information. Yes, yes.
Yeah, and I don't think, did we show them a little piece of the of that weekly letter you send out to the
Newsletter?
Yeah,
Yeah.
did we show it to
Yeah.
them a
This
little
is it
bit?
right
Yeah.
here.
Yeah. That's nice.
So this is one from a few weeks ago. We got one coming out in a matter of hours or two or something like that. I write it on Saturdays. It gets published on Sundays. So yeah, we talked about potential post earnings play set up on Etsy. We said, what's our trading plan? Well, medium term bullish, short term, we think the stock will fade. Dealer hedging impacts actually become negative. In other words, selling between 155 and 160. We will look for short-term weekly bearish expiries between 151 and 160, targeting 135 and 130. Then we'll shift to a medium-term bullish view. What happened with Etsy? So what happened with Etsy? We wrote this on the 27th, so it was published on the Sunday. Here's the 28th, and look what happens. A couple sessions later, where does it get stuck? In our resistance zone. What happens? Sells off. We said 135 and 130. Where did it go to? Here it's at 121. So again, these are the types of trade ideas that you could get access to. This is free for members. This newsletter goes out free every single week. They get access to this. And then we do, the pre-market commentaries every Monday through Thursday. That's our pre-market commentary. So yes. Yes.
Yeah, and I've been getting a couple of questions here about the just about the policy of we do have a 7-day money back guarantee. So anybody that does want to give it a shot, you get a full money back guarantee the first 7 days. So you can join Chris and the other students for a full week there as well.
Yes. Yes. And in terms of the newsletter, I'm looking for the link on that on where they could subscribe. Let me check on that. Let's see. I think we covered it. What day was that? Was that on the 8th? Yeah, on the 8th during this trade cast. So we are doing trade casts on Twitter Spaces. On this trade cast, and I'll post it in the YouTube cast. Trade cast on Twitter. So Twitter Spaces. So there is that one there. And I'll post in the Zoom as well for my members on Zoom. Yeah. Yes. So yeah, that's the newsletter right there. That comes with it. You can sign up for that individually if you want to. Yes. Let's see here. What other questions? I've covered all the questions there. Oh, Savage has a question. So if calls are made outside of the money, the market maker does not start. No, that's not true. The market maker will still hedge them, whether they're out of the money, in the money, or at the money. They will hedge that. It's just different hedging. Yes. So it's not like, oh, they start hedging once it starts getting in the money. No, it's instantly hedged. Because if they don't hedge it instantly and the market moves adversely against them, they're going to have to pay more to hedge that position. So it's hedged instantaneously, Savage. Yeah, it's a great question. If you're a 9-to-5er and trading on the side, does it pose an issue? Not at all. I'd probably say a good portion of the members are 9-to-5ers as well. They just attend the classes when they can. They see the market analysis. They make their trades towards the end of the day kind of thing, do their swing trades. Yeah, we teach people how to do swing trading. Once a month, we do different lesson plans. It's first Friday of the month, I believe. We do different lesson plans and different strategies. So like first Friday of the last month, we covered day trading strategies. The next first Friday of the month, the beginning of April, we will talk about swing trading strategies for people that have 9-to-5. Then we'll talk about long-term. And then we just keep going through those so that people feel like they have trading plans and strategies and things like that. Yes. Yeah, it's a great question. Let's see here. Okay, I've covered all the YouTube questions. And let's see if there's any other questions. Okay. All right. I think I have pretty much covered everything I want to at this point. Rodrigo, I think I've pretty much covered everything at this point. I know you have some things that you want to say about the school. You want to kind of take them inside a little bit, make sure you explain everything to them as well. So
Right.
make sure you stay on for this. And Rodrigo, he's going to share with you, just the benefits, what it's like to have a community. I mean, we have such an awesome community. Everybody's at different skill levels and everybody's learning in their own way. Some are brand new, some are a little more experienced, some are much more advanced. They've done hundreds, if not thousands of trades. So we have all these different skill levels coming in and everybody's sharing their own trade ideas. So if you think about it yourself, you are only going to spot so many trade ideas, but imagine what it'd be like if you start seeing all the other trade ideas that others have, and then I'm giving feedback on them. So you're not just learning from your trade ideas, you're learning from other people's trade ideas. And sometimes they post some darn good trade ideas that you can profit from. So imagine what it'd be like to get access to all these different trade ideas, but then also get feedback individually. So this is what Rodrigo's going to, get. So make sure that you stay on for Rodrigo because he's going to explain a little more about this. Sam says, thank you a lot for the Zoom. You are welcome, good sir. Yes, we'll cover leaps as well, Hassan. Yes, we'll cover leaps as well. And then Isaiah has the question, I'm torn between learning options and futures trading. Do you offer a similar course for futures? We do not. We have nothing on futures right now. To be honest, if I had to choose between the two, I would still want to learn options because, again, if you're trading futures without understanding how the options are impacting, S&P 500 futures, NASDAQ futures, well, then you're not seeing those support and resistance levels. You're not seeing the level of volatility ahead of time. You're not seeing the dealer hedging impacts ahead of time. So there's nothing wrong with trading futures, Isaiah, but you would also, if you are planning on trading futures in the future, you're still going to want to learn options because they will help you spot levels, flows, volatility, hedging impacts that would impact how the futures move. So hopefully that answers your question, gives you something to work with. But I'm going to pass it off to Rodrigo. I'm in overtime at this point. I'm going to pass it off to Rodrigo, who's going to explain a lot more about the Benzinga Option School and how it can benefit you.
Shout out to Chris Capre for coming out here.
Thank you, Rodrigo. It's good seeing you, and thank you for letting them know and answering their questions about the Benzinga Option School. Everybody appreciates it and what you do for the community. We all appreciate it.
Absolutely, Chris. Thanks for being here, man. I'll see you in the school tomorrow, and I'll just stay here, going over a couple questions here for the folks. So thanks for being here, Chris. Absolutely, man.
Appreciate it. Thank you, and stay tuned for Rodrigo here.
All right, folks. So that was Chris Capre. Amazing session. I know that you guys have been waiting for this moment. So yeah, this session was amazing. Absolutely. Cypher in the chat. What's up, dude? Nice. Good stuff. So I've been getting a couple questions here on the email. So I want to make sure to just knock it out here while we do have the session going. So these are the chapters that you're going to be going over. 8 chapters total. Intro to options, Greeks, volatility in options, everything from single to 4-leg option strategies, combining those strategies with the price action, and then market gamma and how to build your option strategy. So this is, if you paint it with a broad paint, right, this is what you'll be getting, but there's a lot of other things as well that you'll be learning in between the lines. So this is basically, the overall content, right? Then you have the actual platform where you'll get everything as far as like Chris's trade ideas, the education. You're going to get the video libraries, the recordings, all that stuff. Yeah, Chris does know Spanish. He shocked me the other day when he started talking to me in Spanish. So yeah. And let's see. So basically this chat room is Chris trade ideas. I'm going to zoom in here so you can see all of the different chats that you have, right? So let's go through this, because this is going to be great for your education, especially if you cannot attend full time and you need a place to pretty much lay down your question or something like that. This is where, what you should do, right? So top chat room, trade ideas from Chris. The Peloton trade, literally the other trade ideas that we went up, ARC K, which was like 150% profit. That was posted in this chat room. Like Chris said, that's really, we're sometimes some of the trades are called, sometimes they're different, but not every trade, of course, is 150%. But yeah, that one was, the most recent one. You have class files here. You're going to have a bunch of quizzes and things like that, where you can pretty much quiz yourself and see where you are, and then follow up with Chris to see if if there's anything that maybe, like for example, if I need help with 2 or 3 legged option strategies, I can pretty much narrow down, okay, I'll take the quiz on this chapter and go from there, right? So it's built like a college, like an advanced course of college. You have classes here, online, you're with the instructor 3 hours a day. Not even in college, you had 3 hours a day, So, and there were no recordings, none of that stuff. You miss. So with here, you do get recordings. And you have other chat rooms, community support, general discussions, questions for Chris. So if you are busy and you're watching the actual content, if you're watching how to say it, if you're watching any of the classes, right, after it's live, right? So it's live. We do have Q&As as well, and those are recorded too. And then we have a recap at the end of the day as well with this, recapping the chapters that we went over. So what this means is that if for any reason you're not able to attend live to ask your question directly with Chris, you have this chat room called Questions for Chris. So you post your questions there, Chris will address them and all that stuff. And I cannot forget about the Student Trade Ideas chat room, where all of the students are flexing everything they're learning, their research, they all work together as a community, and pretty much are able to find things in the market that maybe are maybe worth looking into. And from there, you guys pretty much start seeing the results in real time. So this means that as you are learning, as you are going through all these lessons with Chris, you can talk with the other students. Hey, remember Chris was talking about this or this situation, does this talk? And you pretty much chop it down and work together as a community, not alone. Don't vacuum trade. That's a huge mistake. It's really a total difference, night and day, when you trade with the community, especially somebody like Chris and the other students there. All right. We went through the chat room. Now we're going to go to the homepage. This is a very simple page, right? This is where you're going to get a head start on your week. So let's see, Monday, March 14th, we're going to be going over 2-legged option strategies. Okay. And there's a Q&A session as well. Tuesday, 3 and 4-legged option strategies. So we'll go through the chapters. As you can see, you can schedule your days and things like that. Like, what is the class that maybe I need to pay more attention to? Paul, the entire course. Well, look, I mean, that's a trick question, right? So like, education is a lifelong process, right? Even attorneys and doctors, they have to get continuous updates and continuous certifications and all that stuff, because industries change, right? Nothing stays flat. And that's just like the market, right? Things change on a daily, weekly, bi-weekly, quarterly, monthly, annual basis. So the actual subscription that we're doing here is for a year, right? So it's 70% off. You keep it for the whole year. You get Benzinga Pro, you get the lessons, the recordings, Chris, the trade idea chat room with Chris and everything else we're showing. And you'll have access to all the recordings. Some people, I've seen really good results with people that attend the classes or at least watch the recordings, but they do at least two or three a week at least, right? Obviously, the people that do the best are the people that put more time into it and attend all the sessions, because just like anything in life, you get out what you put in. So if you're putting half effort, you get half results, right? Nobody can do that for you. That's the personal side, but we're doing everything we can on our side to give you the tools, to give you the recordings, to make all the resources and tools available for you. That's why we're giving you guys Pro included for free. There are people that can go to school, go to class, and still not, learn anything. So, of course, you need to have that fire to learn. You need to want to learn, right? We want to make sure though that, we can at least give you everything that we can, right? But the education process, that's a lifelong thing. The subscription is for 1 year that we're doing it here. And the classes, every 2 weeks, you will touch on one class at least once. So it's going to be on a 2-week format, right? 2 weeks and then the next 2 weeks and so forth, but it's for the full year. Now, some people, they can put a lot of time into it, a lot of hours, all that stuff, follow up with Chris on the chat rooms, all that stuff, and they can engage. And that's really what I would hope everyone does. Pro by itself, it's like $2,000 a year. So you're getting it included for free in the option school. If you already have Pro, that's fine. Contact me. I'll set you up. But basically, Chris is going to be like your mentor, educator, trading partner, all that stuff. And in the homepage, you can just pretty much get a head start of what's coming up next week. If you go click on live, everything I'm clicking is on the top corner. Whenever there is a class, you're going to see Chris right there. And you have a chat room right next to it that you can see on the right side. And that is the live chat room that is for the class. So that class, I'm sorry, that chat room is to, for example, hey, Chris, I noticed that you were talking about volatility and such. So this is live, right? So as Chris is going through the lesson, we have a Q&A session, keep in mind. And then we have a lesson review. So you have like 2 hours plus to absorb the material and talk with Chris and follow up. And that's why this chat room is there. That is what this chat room is for. The other chat rooms are for the other stuff, like the trade ideas and all that stuff. That's where, you know, just to keep things organized, make sure everybody is on the same page. Now, if you click on video library, Danik, send me a quick email there if you can. If you click on the video library, you're going to see all of the recordings, right? So Friday we had office hours. You can go and see that. Q&A sessions for the prior classes. Everything is here. Every single class is here. We also give you classes on how to use Pro exclusive for the Option School members. And I don't know if Chris touched on this, but there are several tools that are going to be added exclusively and only for the Benzinga Option School members. So that's still in the works. Literally, I'm announcing it. Maybe I shouldn't. I don't know. But heads up, Option School members, you will get a bunch of cool tools from the folks here, the team at Benzinga. If you join the school, the Option School, you get Chris Capre's newsletter for free. And that's sent out. It's going to be sent out in a couple hours. So if for any reason you join today and you don't get it, email me. I'll send it manually to you. But good question, Paul. If you guys get Pro by itself, it's like around 2,000 a year. So with this, it's like 1,297 for the year with everything that we're showing you, the Option School, the chat rooms, the recordings, the sessions, and Benzinga Pro. So yeah, it's more bang for your buck. Let's see. So these are all the recordings, guys. And let's go really quickly here. So chat, we already went through the chats. The charts, you can open this and it's going to open a chart here. If you click on Pro, it's going to take you right to Benzinga Pro. And right here, you can use a bunch of different tools. I have a bunch of videos that I've already made that are like so many hours. Like I have not counted them, but it's like I have like 40, 50 plus hours of just videos just explaining Pro. So if you do want to learn how to use Pro a little better, I can give you those. Those are just for like actual members, but I can send you a bunch of videos that I've done already that I go into a little bit more detail with this stuff. But everything that you use on Pro is going to be on the left. You have scanners, you have the live squawk radio, customizable advanced news feeds that you can filter by volume, market cap, price, pre-market scanners, aftermarket scanners. You get Benzinga exclusive news, which is when Benzinga reports the news. You have block trades, you have price spikes. There's a lot of things you can do here. Calendars. It's a lot. It's definitely a lot. And we do have a lot of videos. So if you guys do want to join and you want to learn how to use Pro and things like that, I have some videos I can send you. And for those that are asking about the chapters of the school, this is pretty much in essence what you're going to see. And there's a lot of things in between the lines, of course, right? Introduction to options, option Greeks, understanding volatility in options, single, 2, 3, and 4-legged option strategies, combining those option strategies with price action, market gamma, and how to build your own option strategies. So Danik, shout out, man. Awesome school. I know a lot of people work hard to bring you guys this, so shout out to them too. Shout out to everybody, you know, like everybody's working here. So even you guys, right? I mean, this is for you guys to make money and you know, be profitable as traders. So you guys are taking your time and seeing, hey, is this for me? You know, does this school, right? Do they have enough things that seem like it's going to help me? Do they have recordings? Do they have a chat room where I can contact the instructor? Like not even in college, you don't have that stuff, you know, like since when could you chat with your instructor all day? You know, that they don't talk to you actually. So this is a different type of school. Like we actually want you to learn, right? It's not like the how colleges are actually, you know, made. We're actually here with trying to help you guys. So it's a different approach. That's why we have 3 hours plus of classes a day, chat rooms with full access to the instructor, giving you Benzinga Pro with education on how to use it and all that stuff. So yeah, and we keep adding more stuff, guys. I mean, the newsletter, there's so much stuff here that, yeah, and it's just going to keep getting better for you guys. Yeah, Chris, I can look into that for sure, man. Just send me a quick email. And we'll get you hooked up here. So yeah, also there is a special prize in the checkout. If you go, everybody that joins today will get a prize. And the newsletter for free as well from Chris Capre. Okay, so these are the lessons, guys. This is how, if you have a full-time or anything, you can't go live, this is where you would go and find the recording. So that's in the video library. We went over the chats, we went over the homepage, the recordings, the chat rooms, Benzinga Pro, we touched on it a little bit. You can do all your charting. Everything here is real time. This is Bitcoin that I'm looking at here. But you have a lot of different tools here that you guys can use. So I think I covered most of the stuff here, but if you guys do have any other questions, reach out. I'll be happy to go over them with you and just see if this is a fit for you, if this is something that might help you become a better options trader or a better just stock trader. Like Chris said, there's people that only trade stocks that take this as well, because options do have an impact in the market, and the options volume has only been increasing more and more and more. So people are buying more options and they're buying less stock pretty much. And that's kind of why you have to be aware of what's happening, right? Your email. Yeah, Hassan. Well, yeah, I mean, yeah, Benzinga is headquartered in Detroit. That is correct. That is correct. I'm going to put the email in the chat. Sam, give me a second. No worries, no worries. Okay, the other thing you can do in Pro, I don't think I mentioned it, but in the advanced newsfeed, you can filter the newsfeed by your watch list. So it kind of helps you keep the noise out and just focus on the stocks that you're watching, that you're trading. And Pro, I believe, has a mobile push notification. So if you do set any alerts here, that's something that just went out on the Pro side. And every piece of news that comes out about any stock, you will be able to find it on Pro. Pro is the king of news. Benzinga is like data kind of data software. I would say the fact that the data is there does help the software, and that's why you get up to the second speed information here on pretty much all these tools that you will use, right? So Sam, I put the contact, I did the contact there for you. So if you have any questions, for the rest of you guys here, shout out for being here, taking the time on your education, because nobody else will, right? You have to do it yourself. And that's why we're there at the school, right? We're there to help you. We're there to pretty much, give you the knowledge, the information, Chris Capre specifically, right? So with that in mind, folks, reach out if you have questions. I put an email and a number you can reach out. And I'm going to let the stream run here for a bit, but just reach out if you have questions. Thank you for coming to the session, guys. And I'll see you guys in the option school tomorrow. Thanks for joining, folks.